Hi all, it's Catherine Burgess with Burgess Group at Compass, and today we're going to do a quick recap of the Boulder County market and then talk about the difference between the way that real estate is performing during this recession versus during the Great Recession. So in general, our numbers this week looked really good. The luxury market was a little bit slower, but there's still some movement there. The million and below market was very healthy, lots of good numbers there. And take into consideration that we want to think of this in the big picture. Let's not get too granular. We are looking at this weekly, but know that the more important thing is how things are performing over bigger periods of time, and we're in really great shape. So there are 121 under contracts this year, beyond where we were in 2019, which indicates a super robust market. So in terms of the national, where are we with the recession and real estate? Let's go back to the Great Recession. Let's start with how that performed here first. So in the million market and below, we saw slow, steady, incremental growth and progress. That market didn't stop. It just kept chugging along. By 2011, 2012, it was really firing rapidly. And whereas in the luxury market at that time in 2008, it almost came to a complete stop. So there were about 6 to 8 transactions yearly from 2008 until through 2013. In 2014, we saw over 30 luxury transactions. And in the subsequent years, we kept seeing these, all this pent-up demand and these big numbers of luxury transactions happening. So in contrast, today, we are super lucky to be here in Boulder County. We've talked about this, how our market is so darn stable. We see great things at all these different price bands. Nationally, we're seeing that that buyers in the higher end market are benefiting from being able to work remotely, these incredible low interest rates, and then the super robust stock market. That part of the market has been, super heated and doing incredibly well. The lower end of the market, surprisingly, reflects how this recession is, more benefiting wealthier people and tricky for the lower end. So we're seeing less activity in the lower end of the market. People either have lost their jobs or they are unable to take advantage of the lending. Lending is restricted to a degree right now. So we are seeing less activity nationally in the lower end of the market than we did in the last recession. So we're going to have to continue watching to see how things shake out there. But it's a very different trajectory than we saw in the last go-round. So let us know how we can support you. If you have any questions, reach out, and we'd love to help you with your real estate needs. Thanks.